morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market, that is, the crypto market, the NFT market, and how to make some, or hopefully a lot of money on the internet, or if in doubt, maybe just saving a ton of cash as well that you might have otherwise lost in the market crash. Because today we'll be discussing crypto crashing again, Bitcoin down to 95K. Michael Saylor denies MicroStrategy has sold Bitcoin, says they've been buying more, and will report later today. So we'll talk a little bit about that too. And we've got the Monad public token sale going live today until November the 22nd. So we'll look at that offering, just refreshing that in our mind, seeing to what extent we think that is a good deal. We'll discuss that later as going live at a $2.5 billion FDV. We'll also talk just general market thoughts over quite an interesting weekend where we've had some negative price action to the downside. So we'll discuss all that stuff in a moment. So stay tuned. I've got Legendary in the co-host seat with me today. We're ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice. This market is incredibly risky. We do not know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Monday. It is the 17th of November. How are you doing? How are you feeling?
GM, crazy. Just 1.5 months left in the year, and it's been an incredibly fast year. It feels like so many things have happened, and it feels a bit, given all the good things that have happened, feels a bit like disappointing to look at the price action on the one hand, but on the other hand, it also feels like if you're realistic and zoom out, BTC is like still very close to 100K. Forget ETH for a moment, but like BTC is still doing tremendous. The wall is sitting significantly above its last all-time high, and it's been holding that for a way longer period than it ever did before. Like last all-time high, we hit 69K, been chilled there for a brief period, and then we went down only. So structurally, the market has changed, but I feel like the expectations have been so overblown that I can't deny feeling a bit of a sense of disappointment. But the realist in me says, nah, it's actually a very strong environment for BTC, or BTC is very strong, holding up so well in that environment. And I'm saying this from a perspective where like I'm pretty happy with my portfolio. So it's not like the missed gains which is speaking out of me, but kind of echoing a bit of the sentiment that I'm getting from CT, and maybe having fallen to those like super high expectations myself.
Yeah, I know what you mean. I'd say a couple of things on that. I think first, there has been, the first thing I'd say is it's been an exhausting few years. This year in particular has been incredibly exhausting. And we started talking about this when actually Bitcoin was at its highs, of just the absolute exhaustion that we felt after a year where Trump was elected. Then a couple of months later, in January, he was inaugurated. That was some type of top of the market, right? It was with him, his own launch of the meme coin that catapulted the market lower. Then we settled around for a little bit. Stocks then recovered, everything recovered. And then we had the whole tariff fiasco, which the country and the world has been kind of chewing through, all at the same time as the AI stuff's been moving. So I think it's been incredibly exhausting, like trying to get your head around all of these things happening at the same time. While that was happening, gold was running to all-time highs and absolutely smashing and outperforming everything in a market where stocks was also at all-time highs, which is kind of hard to figure out because that doesn't usually happen. So it's been an incredibly tiring year, I would say, specifically. And then maybe, if you've been in this a little bit longer, like we have now, the cycle allegedly is well, to the extent that you might think we're coming to the close of one chapter, is played out perfectly in a way. We topped in mid-October or something like that, before this little downtrend, and that supposedly was bang on the 4 years basically. So definitely been a lot of old holder selling as well to kind of get on top of. And it's kind of unsurprising to me that we had to had to cool off a little bit. Um, any further reflections, Ledge, on the kind of exhausting year? And look, I often think that it's interesting to gauge the tone and perspectives of myself. Like I when you put the market into your veins in the way that we do, researching every single day, publishing every single day, talking about it every single day, I do think you get a decent handle on just like the the fluctuations and spirit of the market. And it just I think we're just exhausted. I think people were just exhausted for a period of time, and that might need to stay exhausted for a little bit. I think people are desperate for a V shape, so one more pump, at which point they want to sell everything. And I think that's just what people want. Market maybe will give it to them, but I get the sense that's more what people want rather than a sincere reading of what is on the table in front of them, at least in the next few months, which is what we tend to say is our best interpretation on the markets. Long term, still pretty bullish, but like in that short to medium 3-month period, I think is the best way to analyze these things. And I'm feeling exhaustion for that period too. Ledge, what do you think?
Very much agree with that. And maybe a follow-up question for you. Have you seen this I don't want to call it trend, but this line of thinking, let's put it like that on the timeline, which goes like this. So initially we said, 4-year cycle, 4-year cycle, 4-year cycle, it's going to be over, it's going to be over. Then the markets did correct, coinciding with the 4-year cycle. And then the timeline went to say, no, but this time everything is different. It can't be that the 4-year cycle plays out perfectly again. So for this reason, we have to come back. This can't be the end of it. But I do agree with you. Like, I think the key word that you mentioned is exhaustion, and it's been an exhausting period of time, and all this up only movement is also exhausting. And I feel like we had this analysis last week on Friday. I think it was in the show by Wintermute, which I presented. Where Wintermute was saying that BTC is like still very much correlated with the Nasdaq, but however, in a way where it is hurt more by a downtrend in the Nasdaq
Mm.
than it's profiting and moving up when the Nasdaq's pumping. And I feel like that they also made the point, look, this is a sign of exhaustion. This is actually something that they would see near a bottom and then see a recovery. So how do you feel about like this exhaustion? Is it something that you think is more short term and we could have some optimism coming back? Or do you think that this is a bit more of a, call it like chronic fatigue or something that takes a bit longer to like recover, even from
Uh,
a like optimistic and emotional perspective?
It's a good question. I've got two ideas. I don't know if it perfectly answers your question, but two things have been going on in my head. One, I think I think back to the last cycle and what practically happened. I think we went to 69K or whatever, and we went all the way back to 16. No one said that at the time. And I just think I'm always conscious that no one basically knows what's going to happen. And this idea that 93K or 92K is going to hold and then we're just going to go back is purely just what people want to happen. I can't identify the marginal buyer right now. That's what I've just kept saying. I don't know who is coming to buy your bags right now. We've been through the DATs. Maybe there's been a couple of kind of uh, sovereign funds that have got involved to some extent. But the thesis for Bitcoin never really changes. You could have made the same argument last cycle. Oh, the denominator's worthless. This is way better. It's going to protect it. It doesn't mean that that you're not exposed to the downside every now and again. And then when conversely, when things flip bullish, you just repeat the same arguments that have always been true. So basically, I can't identify the marginal buyer at the moment, and I think that considering 92 or 93K or even 88 as like some protected position, I think is naive personally, and I'm sorry to say that. At least for the short to medium term. Remember, I overlay the kind of political cycle on top of this, right? Trump has only been in for a year. And I think there's all kinds of time for us to go through a bit more difficult period for a bit before we then send things at some point later in his tenure. So it's he's got another 3 years to go. That's a long time. This year has felt like multiple years, to be honest, with the number of things we've gone through. So first, I think that's what I'm thinking about. And then the other thing that I'm thinking about, I can't remember now. It was a good thing. Let's maybe just react to that, and then I'll come in with something else that's really good. It was good. It was a good one.
Yeah, I like the commentary on the predictions. And that's probably like one of my biggest gripes that I have with how we pick. That's not only a CT thing. That's generally a thing in finance, in hedge funds,
Yes.
etc.
Yeah.
Like, you have to keep in mind there's like 100,000, 10,000s of people on this app on CT specifically, and everyone's making predictions. Like, one of these persons will hit it, but that doesn't mean that they nail the next ones. But just because someone was right in the past, just because some hedge fund was early to invest in Facebook, now Meta, or whatever company, it doesn't mean that this like past track record is an indicator of the future success. But we love to basically, pick the prediction that was right and make them the hero, not really judging if that prediction was like pure luck or if this is a series of um predictions that have been accurate, and if this participant actually is really really good at that. And we this is a massive like thought fallacy to be like, oh, someone said something, it turned out to be true, they have to be right the next time as well.
Indeed. And then so this other thing I've been thinking about is like, what does Bitcoin represents a few things, right? It represents sovereign money that can't be printed. It's a better form of money. It's digital gold. Those are a few things it represents. The other thing that I think it represents, and maybe this, what I'm trying to do at the moment is weigh the importance of this. It represents an asset which outperforms. That's like part of the point of Bitcoin. And I still, the returns over the last year now, I think you can correct me if I'm wrong, are not significant. Maybe from the start of the year, because I think we went to 100 by January ish, something like that. So for the whole year, it's gross, like very, very significantly underperformed. And there's probably an argument to say, look, every asset will go through periods where it underperforms other assets. I think that's probably reasonable, right? Gold doesn't simply outperform everything else all the time either. It requires certain conditions when it does better, and then in certain conditions it will do worse, and it forms a part of your portfolio. But I think what maybe people who hold Bitcoin have been addicted to more recently is that the point of holding Bitcoin is to significantly outperform. And if Bitcoin stops significantly outperforming and other things continue to significantly outperform, then that's a problem for Bitcoin in a way that gold doesn't have that problem, because people who hold gold are not thinking, right, I'm going to outperform the whole market in the next quarter, in the next 3-4 quarters, because gold is like a risk off asset. It's going to hold its value. If people are going to print money, it's going to go up in value over time. It's probably going to go up in value. But it forms a part of your portfolio, but you're not looking to outperform the rest of the market, right? Whereas I think with Bitcoin, you really are, because that is the point of holding it, or at least that's part of the point of holding it. And I think what might be happening is we're going through this period of transition where it's actually becoming a little bit more like gold, and people in some ways want it, they want that to happen, right? You want Bitcoin to be more like gold, but then that'll also mean that as a proportion of your portfolio, no one would ever have told you to have like 50% of your net worth in gold, but people might, in who've been in this industry, might have had 50% of their net worth in Bitcoin, for example. Whereas I think if it's going to be more like gold moving forward, that proportion that you hold is going to be way smaller, because you don't need as much of it, because it's not going to outperform in the same way as before. So that's something I've been thinking about a lot. It's like Bitcoin actually represents outperformance as well. Like that's what you're buying when you buy it. You're not just buying digital gold, you're buying digital gold that's going to outperform everything else and ideally catch up to gold in some way. And if it fails to do that routinely, and it's definitely been through a tough period, then there's a challenge there. Ledge, curious for your thoughts on that extended piece of thinking from me. And then Oxy's got his hand raised. We'd love to hear from him too.
I mean, it's kind of what we're seeing, right? We pulled up the BTC volatility chart and we've seen that both the like historical one as well as the forward-looking ones, and we've seen that the average BTC volatility has dropped massively despite its increase over the last month. But like if you look over the years, 30-day volatility has gone down from like 6 to 1.8-ish% or so. And that is probably the result of a more diversified holder base. That is probably a result of ETFs coming in. It's also a result of ultimately now having a market size where participants can, like OG whales, can sell to the tune in the hundreds of millions. And if this is a logical conclusion, right? If you have new participants who enter with the thinking that BTC is the outperformance, that's the aggressive part of my portfolio, this is where I put in 5%, 2%, 3%, whatever. And I hope to outperform the S&P 500 a bit with that. And I have gold as a part of my portfolio, which is the insurance. If the S&P 500 does not do that well, then it also means that if BTC shows more volatility or would show more volatility to the negative side, you won't be as tempted to sell so quickly because it's just a smaller percentage of your portfolio. So I agree with your thesis a lot.
Yeah. Okay. Interesting. Definitely want to bring that up. I think a lot of people are talking about what they want to happen and maybe not exploring some of the other side. And I appreciate this is the other side. This is the side that people don't want to hear about because people just want to talk about the numbers going up all the time. But to be fair to us, we've been expressing taking risks off the table, being net sellers of crypto since the summer and not trying to time the top, just doing it routinely when you notice some mania and just, de-risking, take some insurance in that respect. But Oxy, welcome to the stage, my man. Curious for your thoughts on this conversation. What do you think about this, how we're framing Bitcoin here as a kind of representative of an outperforming asset? And that's kind of one of its core properties or one of the properties it needs to have.
100%. Yeah, I completely agree with you guys. And this is what you get when you get institutional money coming in or traditional investors coming in. Is it becomes a more stable asset. We, like you were saying, the fluctuations are not as drastic. They don't move to the upside as drastically. Bitcoin and maybe crypto at large has kind of just become a more risk on side of people's portfolios, to where it's going to be more regulated and it's going to be more understanding. My wife and I were just talking about that this weekend with, like, we have a big NVIDIA position in our portfolio. I bought that in 2017 and it used to be my risk on, like it was a part of my risk on side of my portfolio. Like you never know what's going to happen with it, down the line. Obviously NVIDIA is a little bit of a weird situation because of how big and how well it's continued to perform, but it has turned into more of a little bit more of a stable and or staple of people's like more conservative side of their portfolio. Like obviously it's not super conservative, but it's more consistent and more regulated than it was in the past, obviously, because it's become the most valuable company in the world. But that's what Bitcoin's becoming. Like you get traditional money coming in, like Legendary was saying, it's a more risk on side of people's portfolios. You're like, the whole mindset of what crypto and Bitcoin is changing in the side of investors. So I completely agree with you guys. It's I think it's just going to continue to be like that side of people's portfolios as it goes forward. So this volatility and this outperformance is just not going to be as present, I don't think.
Yeah, and I think that's what that means for people then is, as they look around, if it's not going to outperform and it is simultaneously one of the more riskier things, you might need to look elsewhere to split your riskier portfolio into some of the riskier things that are outperforming, whether that's AI, whether that's quantum, whether that's energy, or any of these other things. So robotics and things of that nature. So, I think as we continue the show, like we're going to, and I mean, over not just today, in general, over the months, over the years, we'll be increasingly exploring all of these other things, right? Because that's wherever the risk is to make more money, that's where we're going to have to go. And I think equity perps on Hyperliquid is just one little window into the future where we start to see all of these assets stacked up next to each other in competition with each other. So now if you want to long Bitcoin or long NVIDIA, you can make that decision right there and then next to each other. And I think Robinhood's going to facilitate that too. But, it's not going to be as obvious that the place that you have to put risk on is, okay, just buy Bitcoin. So a bunch of interesting thoughts here to kick off the show. Definitely went down the rabbit hole a little bit with that conversation, but I think it's helpful when the market is down in that way. So let's get to the roundup though, but just a reminder today, we're delighted to say today's show is sponsored by Tria. Tria is a self-custodial bank. The show's self-custodial neobank building the future of payments for both humans and AI. Tria unifies spend, trade, and earn across all chains, giving you one powerful platform to manage your assets securely without ever giving up control. With up to 6% cashback on your Tria Visa card, you're rewarded every time you spend. And Legendary is an avid user of the card and has been racking up his cashback, from what I can tell on the timeline. So, backed by $12 million in pre-seed and strategic funding, Tria is creating the infrastructure layer for the next generation of on-chain finance. Right. So that's the read for today. We're going to catch up with Tria in just a little bit. Legendary is going to share a few more interesting details, and we'll get to that in a little bit. Ledge, would you mind taking over on the roundup for today? Because I need to get something for 1 second. Can you do that? Thank you.
Starting as usual with the price action. We did say BTC is down over the last 24 hours. It's not that dramatic because it crashed previously in the weekend. So we're sitting at 95.4K right now. ETH is down still on the week. Obviously, it's down 11%, but is up a bit over the last 24 hours, almost back to 3.2K, up 0.7%. XRP also standing out green over the last 24 hours, $2.26. BNB is flat over the last 24 hours, $930 there. Solana follows ETH's trend as well, up 1.2% over the last 24 hours, down still obviously 15% on the week, sitting at $140. Hyperliquid, that is the really impressive one to me, is still at $39. Yes, it's down 7-point-something% over the week, but feels like a stable coin at $40 or around that $40 range, which in this market is pretty impressive. And then scrolling down a bit more in CoinMarketCap to get to Sui. Sui is at $1.70. It's been hurt the most from all of the majors and alternative majors, is down 21.5% over the week. So this is not looking too great. Taking a look on the meme coin side of things, just refreshing that to get the latest price action. Memes are impressively not down more than the majors. Doge's down 10%, 11% over the last 7 days, up 0.4% at 16 cents, to 16 cents over the last 24 hours. SHIB is flat, down 10% over the week. Pepe is up 1.5%, down 20% over the week. Trump's flat at $7, down 17% over the week though. Pengu flat, down 20 over the week at 1.3 cents. SPX Mertz coin definitely suffered a bit more. This is down 2% over the last 24 hours. However, it's down 30% over the week, down to 50 cents. Just scrolling a bit there. Fartcoin, similar story, up 3% on the day, down 25 on the week. Most of the things are following this pattern, and a lot of memes are not down much more than some of the alternative majors, which we just covered. Maybe one of the exceptions here being Useless Coin. Useless Coin is down 16% on the day. It's down 44% almost over the last 7 days and trading at 12 cents. That has been hit way, way harder than the rest. And that's it from the meme coin side of things. In terms of the headlines, we said at the top of the show, crypto did crash, BTC down to 95K. Talked a bit about on the show. I'm going to do a bit more of a roundup to see what is happening in other asset classes, what is gold doing, what are equities doing, to just paint the complete picture. Then second headline is going to be Michael Saylor denying that MicroStrategy has sold BTC and saying they've been buying more, and that there's going to be a report on that today. Third headline, Monad's public sale goes live today until November 22nd. They are offering 7.5% off the supply at a $2.5 billion FTV. So you're going to get into that as well. In terms of some more price action, covered some of that. Aster, however, didn't touch on that, up 4% to $1.24. Stark up 4% to $2.3 billion FTV. Sui and Useless, we did cover. They suffered way more Then other alts or memes in the case of useless. Getting to some notable sales, CryptoPunk's floor is still holding up at around 100K, with this punk, which I'm sharing on screen, which sold for 40 ETH. A People Everyday Raw sold for 8 ETH. Also taking a look at the majors for the NFTs to see how they are doing. Apes are up almost 2% on the day, 6.3 ETH floor. Pudgies are sliding down further at a 5.4 ETH floor, now down 12% on the week. Moonbirds just a touch shy of a 2 ETH floor at 1.98. Up on the day, 3.5%, but still down on the week. And Azukis are flat, but down 13% on the week at a 0.9 ETH floor. Apart from that, the only other thing noteworthy, and BJ has talked on that over the last week, are the Infinix patrons. They did pump quite significantly, and they're up another 3%, 1.55 ETH floor, and they're defending that quite well. And getting to the rest of the Web3 roundup to see what's happening around the space, we have Japan to reduce the current maximum of a 55% tax on crypto to 20%, which is quite significant because ultimately this high tax has been the reason why we've seen companies like MetaPlanet stacking BTC and being publicly traded, even being so successful. Based on trading terminal integrated poly market for prediction markets, Tether, considering a $1 billion funding round in the German robotics company Neura Robotics, which I quite like because this is part of my robotics bag. Red Drinks announcing the inclusion in 200 Giant Eagle stores across Ohio, Pennsylvania, Maryland, and Indiana. And last but not least, Felix announcing USDC incentives to borrow USDC against Unit BTC hype and Kinetic wrapped hype. That is the roundup. B, is there anything you want to touch on from the things?
First to touch on is thank you for taking that over for me while I had to get the door from an unexpected delivery. So thank you for that. Second, I think there's a couple of things I'm finding interesting at the moment. You mentioned Neura Robotics, this German robotics company. Did you say you know something about that? Is that part of your portfolio? What's the situation there?
Yes, Neura Robotics is part of my robotics bag. What is there to say on this? They are working on humanoid robotics. I think they have a very, very ambitious goal of wanting to produce 5 million humanoid robots by 2030. They've seen pre-orders, I think, exceeding €1 billion, like 1.17 billion USD. Basically, you can see them as a competitor to what Tesla is trying to do with Optimus and coming out of Germany, and they've seen quite some success with that. But obviously, it's still extremely early stage, and given the fact that like 2025 is almost over, and like 4 more years left until it's 2030, I think that 5 mil humanoid robots by then is a stretch goal. But I like how they are working on it and what they've been doing so far. But it is an incredibly speculative bet. Nonetheless, I was happy to see Tether having an interest in that.
Yeah, that's pretty exciting. I don't know if people saw the clips of Elon talking about robots over the, I think it might have been over the weekend or late on Friday, kind of painting a picture that these, like in some ways, the imagination for them is far too small at the moment. I think some of the demos that we've seen from some of these things, it's like, okay, they're kind of working in the factory instead of you. Maybe they're helping you in the home doing some of those menial tasks that humans don't want to do anymore. But I think what the vision is far more ambitious and in some ways maybe even far more egalitarian, in the sense that one of the limiting factors, for example, with healthcare, and I think he was giving this example where once you have these robots that are trained, highly trained on the medical side, they'll be able to operate and know things and operate on that knowledge to a really, really high standard. And is obviously scalable. Like one of the limiting factors is that humans with that knowledge and capability are in very small demand. Like if you had something that was really terrible go wrong with you, Legendary, I'm not sure where your location of choice would be to go get that looked at. But I know one of the places, you know, being from London, one of the places is Harley Street. That's like a very world famous, well-known place where people from around the world who have money will come to get their issues looked at. I know multiple places in the States. Obviously, they also have, you know, world beating, world leading medicine and operational capabilities and talent. But what, you know, this was what was being pitched for robots, which is something I hadn't really considered in the same way. I think maybe the initial thought is that you go to these menial tasks. It's like, okay, maybe they can, and maybe realistically, those are the first things that they will do. But the TAM of the market, I think this is what caught my imagination. It means the TAM of the market is way bigger than you would initially think, if you are only thinking about the kind of small day-to-day tasks. So curious if you had caught that commentary as well and what you thought about it.
Yeah, I like that. Obviously, you have this, you know, this one line to say, at one point, humanoid robots will have the iPhone moment. Everyone's going to have one, but there's so many more use cases for them apart from the things that we have been seeing, like Amazon using robots or delivery drones, whatever. And the medical field obviously is a quite fascinating one, and I feel like that is going to be very interesting to see this specific field playing out from a legal perspective as well. Going away from the robots and going to LLMs for a second, I don't know if you've noticed that ChatGPT, essentially, and not only ChatGPT, other LLMs as well, stopped giving you commentary on diagnostics, on, you know, uploading your blood work, X-rays, CT scans, whatever, which ChatGPT and other LLMs were pretty good at commenting on that. And now they say, like, no, we don't do that anymore.
Really?
Yep.
Oh.
There's still ways to get it to do it. But generally that has been hard coded into some of them to stop giving you commentary on things like that, because probably there's been some sort of legal case or some sort of
For sure.
cases where they had to draw the line where people asked, you know, stupid things and did follow that. So it's going to be interesting to see how that's going to apply to LLMs in diagnostics, but also to like to robotics.
For sure. I think that will definitely be the case. Often there will be these legal issues where, you know, if people begin to make real life decisions on the basis of financial or medical advice given by ChatGPT, they're going to have to up their disclaimers in a way more significant way, and make sure people are aware that they are not going to take liability for those things, obviously. Interesting stuff. So yeah, that's what was catching my attention in the rest of the market, and maybe just a reassertion that for any private exposure that I get to any robotics companies via any of these pre-investment platforms that you can get into early rounds, I want to buy $1 of Tesla. I still haven't done that but Tesla has dipped a little bit, at least from like 440 or whatever it was at. It went down to 400 at least, and maybe it's going to chill here for a bit. I really don't know, but I do need to start adding my dollars of Tesla into Tesla for as many dollars that I've invested into robotics companies, because everything that I look at to do with Optimus Prime, Optimus, it looks incredible. And I'm definitely not an expert in the industry at all, but I feel like it's something's going on there. So that'll be something I'll continue to look at. But look, that is that. Why don't we get into the main set of headlines for today, though, Legendary, because we've got a couple back to back, specifically to with Bitcoin in the market. You're going to take us through crypto crashing again, Bitcoin at 95K, with a variety of other analysis of the rest of the assets. And then I'll do a little bit on Saylor and what he's been saying about the alleged sells from MicroStrategy.
Absolutely, yeah. First of all, I want to follow up with a data point which we touched upon last week, which was the ETF outflows was one of the main headlines on the day, where we saw 866 mil, second largest day of outflows since the BTC ETFs, since their inception. And Friday was not really a good day either. We've seen outflows of 492 mil, but also checking in with other asset classes. And this is the thing that I find interesting right now is that basically um, everything is down a fair touch. We did see gold initially correcting back. Obviously, it hit its highs at 4.4K, went down all the way to 4K, dipped a bit under, recovered to 4.2K, and is down again, is down 6% over the last 30 days, but it's also down to $4,080. Similar picture for the S&P, for the Nasdaq. The Nasdaq over the last 5 days is down almost 2%. Just taking a look at Finviz to see how some of the different sectors are looking like. And it's painting a very, very mixed picture. On the one hand, you still have some of the tech companies which are doing pretty well. You have Nvidia, that is 1 day performance, which we're looking at on the screen, being up another 1.8%. You have Oracle doing very well, 2.4%, Palantir, as well as Microsoft up more than 1%. Then you have the financial sector with JP Morgan being down 2%, and other banks, so most of that sector actually being in the red at the moment. And then you have the other part of tech and entertainment, where Alphabet is down almost 1%. Amazon's down a bit more than 1%. It is a very mixed market, and I find it hard to read because typically you would expect some of the sectors to move up when others are moving down. You would expect maybe like some of the more defensive consumer goods, base needs, etc., to do well now, but they are not doing too great. And then you still have Nvidia as the largest company still running, especially after a week where the Nasdaq has been down a fair bit. So it is, I find it is a challenging market to read.
Yeah, I think that's fair. It's a difficult one to look at. Maybe, or definitely a difficult one to analyze, I should say. What have you made of this move over the weekend, Ledge, in crypto specifically?
This is probably the part that I can understand. Ultimately, Nasdaq is down 2% over the last 5 days. Obviously, TradFi closed over the weekend. There's no reason for crypto to pump over the weekend after a week like that. So seeing BTC being hit harder, especially after we established that we're now in a period where we see the stronger correlation with the Nasdaq in down periods, that is the part that makes sense to me. The part which I find confusing is that gold at the same time, for example, is correcting. And then if you also take a look at the Dixie, the dollar index, to get that up, is we did report that in the first half of November, the dollar index, the Dixie, did show some strength, was actually up, and it's still up on the month, but now has also corrected down from that as well. So gold strength is a bit is you would expect gold to be stronger when the Dixie is dropping like it's dropping now, but it's dropping as well like the Nasdaq. So it is very confusing. I would say the least confusing part is that crypto is down when the Nasdaq's down now, but all the other things I just can't get a good read on at the moment, to be honest with you.
Fair. I think one interesting indicator that we should be aware of is whenever the denominator is worthless, chat or conversation gets loudest. That's often when the DXY appears to bounce in some way. And it's only when people get so overconfident that the dollar is worthless, which ultimately it is, right? Because that's the direction it's trending in. Inflation is crushing everyone. Everything's so damn expensive. It clearly is declining in value significantly all the time. But when those calls get loudest, seems to be a time where it's actually okay to cash out some over a period of time to increase your worthless stack of dollars, which is actually, when you add them up, sometimes actually not worthless, in fact. So don't forget that sometimes. I think that's one of the learnings in general, that yeah, fine, the denominator is worthless, but you still need that denominator in life. And if you have a lot of them, then you can actually do a lot of things with it, which is ultimately what you're trying to earn more money for. So that's just one reflection I think I'm conscious of as that message got a little bit loud over maybe the summer onwards. So that's one reflection. Let's just look at what Saylor's been up to then, because I think a lot of the market, maybe in some ways, at least part of the real push higher was MicroStrategy's intense buying beforehand. They just would not stop buying, maybe even to the extent that people would have preferred if they did slow down, as they kind of represent a little bit more of a risk to the asset. I know that's some people don't all agree with that. But so this is the news that on Friday, or a couple of days ago, Michael Saylor, CEO of MicroStrategy, the firm which is the biggest Bitcoin accumulating vehicle on the planet, denied reports of Strategy selling Bitcoin because it was reported that some of the Bitcoin in their wallets had a lower number in than what they had before. So that caused a little bit of panic amongst Bitcoiners and crypto investors, considering whether they had to sell some, especially because the MNAV of MicroStrategy has gone beneath one or very, very close to one for the first time in a long time. And when that's happened for other companies, they have maybe considered, and some of them have done this, to sell the underlying asset in order to buy the shares to get that back above. So that was the concern. But he denied rumors on Friday that the company had sold approximately 43,415 Bitcoin worth 4.26 billion to over 100 different addresses amid a sharp crypto market downturn. The speculation came from Arkham Intelligence data showing large transfers and apparent drop in tracked holdings. But actually, what he went on to say as part of the interview, he said that there was no truth to the claims. He further told CNBC in an interview that Strategy is accelerating their purchases with more acquisitions to be announced on Monday. So that is today. We're buying quite a lot, he said, describing recent price levels as a strong base. So that is all I think we have to say on that. Strategy's stock saw a 4% decline on Friday and has been in decline for a long time now in general. So now down under $200 from highs of, I believe, Ledge, if you just change the year to date, so let's see what the high was for this year. This is plus, what number are we at the top there? 450 or something. So unsurprisingly, maybe it's kind of levered Bitcoin, isn't it? So if Bitcoin's doing great, MicroStrategy will rip higher and higher. And as Bitcoin sells off, then Strategy will print lower lows. So that is that situation there. Curious for your thoughts, Ledge. I'm personally a little bit concerned. My understanding is that they are not in danger of needing to sell any Bitcoin to finance anything, to buy back their shares or anything of that nature. Nevertheless, from the perspective mainly, which is the one I was talking about at the top of the show, when you're trying to identify the marginal buyer, like who's still got the energy and desire to continue to make these purchases, if MicroStrategy can't do it, which they have materially stopped recently, fair enough, maybe they've been firing off like relatively small clips for them compared to what they were doing over the summer, but it's relatively small versus what they were doing in the summer. And if they're not going to be buying and they've been leading the buys, then I don't know if many other people will have much confidence to be marginal buyers too. So that's primarily why I think that's where my concern stems from. Not that MicroStrategy don't have the money, they're going to have to sell the Bitcoin, and I don't think I'd stretch my concern that far. Mainly, it's just they don't seem to be a meaningful, sizable, routine, and marginal buyer again at the moment. So that's what I think here. Ledge, curious for your thoughts.
Yeah, I agree with you. Structurally not worried about Michael Saylor's strategy, but worried about exactly that point with the marginal buyer. And I'd probably seen the post, looking for it as I speak. This one, a post by Michael Saylor, where there is like an orange burning ship in the background, which he has left. He's left the sinking ship in this imagery. And that post, I mean, tells you everything. Got 11 million views with a ton of people, like including OSF, commenting stuff like, "Brother, I'm not sure a sinking ship in flames is the right image here," or even making the point that why Mert was asking this, like, why is the ship sinking? Other people are making the point, why are you leaving the sinking ship? So, and even the other posts of his get what, like 500K views, 200K views, something like that. So this one getting 11 million views probably tells you how the market is worried about Saylor, and probably tells you about like the optimism that he was instilling and inspiring. And if Saylor does big buys and everything's looking good, then it's probably easier to find a marginal buyer, as opposed to a market environment where he is leaving a sinking and burning ship and posting pictures of that on X, but also telling you that everything's fine, which is a bit weird.
It is a bit weird. I'm sure what this is supposed to be is maybe the ship is the sinking traditional economy, whereas he's making away with his orange Bitcoin and his orange lifeboat. That's probably how it's supposed to be read, but clearly no one read it like that. So that's me being charitable. They should have made that clearer, for sure. So good stuff, Ledge. I think that's helpful. I think we share the same concern there, and we're just kind of keeping an eye out on that. Right, we got one more headline to do today. We're gonna look at the Monad sale again. I know we've touched on it before, but it's going live today. So we want to get a bit of an analysis going there. Look at how it's doing on the pre-markets. So we'll do that in just a moment. But before we get that, we're going to go to our Tria update. I'd like to say we're partnered with Tria for today's show again. We'll do that. Do these every Monday. So giving you these updates on the self-custodial neobank Tria Legendary. Why don't you take this one away?
Yeah, you said it perfectly. Tria is a self-custodial neobank, allows you to spend in over 150 countries using more than 1,000 tokens on your Tria Visa card, while earning up to 6% cashback every time you spend. Behind the scenes, Tria runs on its own tech called BestPath, which is a permissionless Pathfinder marketplace where micro markets compete to move your money faster, cheaper, and more securely across chains. It's already powering payments for 20 plus leading protocols. And last week, Tria did roll out a series of updates, including user referrals being live in the app, BTC support, and an export feature for your seed phrase. And there's some more features that Tria is working on for the app, which includes points, card withdrawal, card statements, and longer app sessions. If you want to use Tria yourself and earn up to 6% cashback, all you need to do is to sign up via the link in the comments section, which I'm going to post in a couple seconds.
Thank you very much. That's good. So if you want to get involved, you want to sign up for this, you can sign up via the link Legendary just shared. As he said, 6% cashback, I think is pretty healthy compared to the rest of the market. So I know Legendary has been racking up those cashback dollars as he spends some of his bull market gains. So do sign up if you're interested. Shout out to Tria again for partnering with us on today's show. Getting into the final headline, guys, we said we're going to look at Monad. The Mon public sale goes live today on Coinbase at a $2.5 billion FDV. Literally, if you just scroll down on this page, you get to this Mon public sale details graphic. It's a little bit further down. Here you go. So just for people who are wanting to get the breakdown, Monad is a high performance layer 1 engineered for speed without sacrificing security or decentralization. Mon is going to be the Monad network's native token. You will need to use it to pay gas fees, secure the chain via staking, and align validators, developers, and users around the growth of the protocol. This token sale will take place on Coinbase. The reason why people are excited about it is that it's been getting built for ages and ages and ages. It's been built for years. It's had millions of dollars in funding over a huge period of time. I believe the latest VC round was as high as 3 bill FDV. So this is technically slightly lower. I think the natural contrast that people have been making is because these two teams have been raising ICOs at a similar time has been with Mega ETH, even though Mega ETH is technically an L2. Mega ETH's pre-sale took place at a $1 billion FDV with previous pre-sales much at lower prices, whereas this is coming in at a 2.5 bill FDV, which, to be fair, I think I understand from the perspective that you can't undercut your VCs by a significant amount. Whereas I think Mega did still have VCs, but they were in from much earlier, so they didn't really have that pressure to increase the price. I do think that means that some of the gains are not there to be had, right? Obviously, at a starting valuation that is lower, your upside is bigger, and rightly or wrongly, and people who are more technical than me might know better. Monad is an L1. L1s have always had a premium up till now. Mega ETH is an L2, but I think they are making the argument that this kind of L2, the argument that an L2 is going to be significantly different to the L1. It should be disappearing over time, because basically you just want to find a performant place for your apps to live and do cool stuff in a fast way and in a reliable way. So how this has played out in the pre-market so far is that Monad now, if you look at this chart, is down to a 4.7 bill FTV, whereas if we compare with Mega is been around 4 as well. So this is not just me kind of putting these two things near each other. Mega's at 0.43, so 4.3 bill FTV. The market's kind of, whether it's because they're just releasing at the same time, whether this L2, L1 difference is kind of compressing, and in the end, it's just an environment for you to decide to provide an execution environment. It looks like it's compressing based on what the market is telling us as well. So, so the Monad sale taking place at a 2.5 bill FTV, and you can, minimum bid size is $100, whereas maximum bid size is 100,000, subject to higher maximum thresholds for Coinbase One subscribers. So you can actually get access to more. My understanding is they're going to try to prioritize like breadth. So they're going to try and give people more. Sorry, they're going to try and give more people more than give like a few people 100K. So that is how they're going to allocate. And then the question is Ledge, this is 7.5% of initial token supply. That's how much you're allowed to do. You enter via Coinbase if you have a Coinbase account. Just to note, there are certain places that are not eligible. So Europe, for some reason, can't participate in this one. We're not going to pretend like we know why anymore. Sometimes these rules are entirely random. I believe the US is also out, or is the US in on this one? I know the
US is in with the exception of New York. New York is out, but the rest of the US is in.
Got it. Okay. So that's the thing available to you, Ledge. And interestingly, you're out on this one. So this is a very unbiased take. Minimum bid 100, maximum bid 100,000. If you had access, what would you be doing at this valuation at 2.5 bill FTV?
Given that they want to fill up from the bottom, they have not used Coinbase before, so they don't have a good track record on Coinbase. I would definitely not get a full allo filled. So I would do like a lower bid, put a couple thousand in, see what I get filled. Not because I'm like so bullish on that potential up to 2x upside of that, but because of the fact that we talked about this, like we both don't like the design, but Coinbase has been specific about it and said, if you don't dump this within the first 30 days, you're going to have higher allocations or a chance to get better allocations, whatever future sales they do. Now, we also said on the critical side that, other things that Coinbase did outside of the core business, like the NFT marketplace and perps, did not do too well. But that's a bit of a speculation that this is not going to be the only sale that they do that might be worthwhile, especially a potential like Base ICO, and being positioned for that. Just for that reason alone, I would bid in the pre-sale, but I would not full send it because, well, they said they fill it up from the bottom and there's zero chance that I would get a good allocation in this. Not super bullish in it, but that would be my more strategic reasons to do that pre-sale.
Yeah, I mean, the premium is much tighter here, right? So with Mega, it was 1 bill FTV raise, and then they're trading above 4 on the pre-markets, which, look, we don't trust the pre-markets entirely, but they've been a bit better on Hyperliquid since the pre-markets have moved there. whereas Monad's going at 2.5, trading at 4.5. So clearly the upside is more limited. We are in a bit of a precarious time in the market anyway, right? So, if that slid beneath 4 for whatever reason, then you're starting to get a little bit more concerned, especially if you have a bigger bag. You are fully liquid though, so maybe that gives people some comfort that maybe they could sell out quickly potentially. And to your point about Coinbase, I'm very reluctant to think we need to like farm Coinbase in some way or build up a quality score here. You might be right. Maybe the base ICO takes place here at some point in 2026, and if you did this and you held, maybe that's better. But then in that case, you want to do it with a small amount probably to protect yourself to the downside. But I don't know. I'm not keen on betting on Coinbase specifically, actually, or actually any product in this way, just doing things purely because you think this product's going to be big in the future. Coinbase tried to do an NFT marketplace. It didn't work. They tried to, I think they are doing perps, and people, we were legitimately discussing, is Hyperliquid going to be dead because Coinbase perps is coming and everyone in the US is going to use Coinbase perps instead of Hyperliquid. Like they build these things and maybe some people use them and sometimes the products don't work at all. So look, if they funnel the biggest names into this, then sure, it will be big, but I'm kind of skeptical as to whether it should be like top of your priority to only farm Coinbase in that respect for this. I think you should buy this if you think it's good value, if you think it's, you're going to get some decent upside, and you get exposure to the platform at the same time. But I'm kind of with you. I don't think it's one that I would full send necessarily. Although I'll probably decide later and see whether I want to really full send it, but not 100% sure yet. Ledge, anything else? Any final comments, thoughts before we wrap it up for today?
No, not really. I can't participate. This is what I would do. I agree with your take as well. If it would be cumbersome to participate in that, it definitely would not be top of my priority list. But if you don't care about putting in, a few grand or a couple $100 or whatever, and it just takes you a couple minutes to build that score, which might be completely useless, which might be worth something, who knows, I would do it.
Yeah, I think that's the bare minimum. That's the bare minimum which you should do, I think, in my opinion. That's the bare minimum that I will do, and then you just kind of decide if you've got the capital or means to extend yourself a little bit in this case. Right, good analysis. Appreciate the insights, Legendary. With that out of the way, guys, that's the show for today. Hope you enjoyed it. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour live on X video, YouTube, and you can catch us on Apple and Spotify podcasts too. We'll be back same time, same place tomorrow. Have a wonderful day. Take care, and we'll see you on the other side. Bye-bye.